It's Brian Preston, the Money Guy.
All right, Derek Z has a question. He asks, I don't have access to an HSA through work. So what should I look for when opening one, and where? Are there some companies better than others? Are there things that I should consider? Obviously, HSAs are part of what you suggest in the financial order of operations. So what do you guys think?
We love HSAs when they're available. The first thing that we have to kind of level set in order to be able to contribute to a health savings account, you have to make sure that you are currently covered under a high deductible health plan. Not all health insurances will make you eligible to contribute to an HSA. It's only if you're in a high deductible plan. Well, if you work for an employer that has, I'm just going to use two options for simplicity, and one of them is like this highly subsidized Cadillac amazing insurance, but it's not high deductible. And then you have this high deductible plan, but it's not like the cost savings isn't justified. Don't assume that you should automatically go for the one that makes you HSA eligible, because it's not always the best case. We see a lot of employers where they subsidize really, really great plans for their employees, and you have to take that into consideration. But if you are someone and you are in a high deductible plan, and that does make you eligible to contribute to a health savings account, what you do, how you do it, and who you use as a provider can make a huge difference.
Yeah, and first of all, if your employer does offer it, there are some added benefits in the fact not only with the high deductible, but if they offer the HSA directly through like your cafeteria plan, you're probably saving payroll taxes too,
sure.
which is an added benefit. But for somebody like Derek, where maybe they have a high deductible plan, but they don't actually offer the HSA account, the custodian who's going to hold your money, then you have a few more things you got to figure out. First of all, are you somebody who's going to use this as a clearing account, meaning you put the money in, you take the tax deduction, but then you pull it right back out for the reimbursement of all your medical expenses? That's the way 96% of people use health savings accounts. So that's the first thing to cover. Now, if you're one of those financial mutants who has built up enough in your HSA that you can cover some of the basics, like your deductible of what, of anything that might happen in the coming year, and you actually want to be part of the 4% that's going to invest that money, now you've got a bigger decision grid that you have to figure out. And here's what I would do, Derek, is I would go figure out, okay, if I am going to be a financial mutant who wants to invest a portion of my HSA, okay, we've got to figure out what are the annual costs to even have this as an option to do the investing, because a lot of providers, they will offer it, but there is a cost to do the investing side. What are the investment options? I mean, is this going to be low-cost index type funds, or is it going to be some obscure investment company that's going to charge me with high-cost funds or some crazy trading fees? I mean, I like it when they do offer the Vanguards or the Fidelities and all those type of low-cost index funds, because that stuff is going to be important to keep your costs down. And I'll tell you, a few years ago, this was the Wild Wild West, meaning that you had to go work with some obscure HSA custodians that would maybe have a Vanguard, a few funds in there that do. But I got to tell you, the world has changed. And this is what I love about innovation. This is what I love about the world with these providers trying to encapsulate and get more market share. Big players like Fidelity have gotten into the health savings account space.
Yep.
And I got to tell you that I think that changed this landscape a lot. That's not an endorsement of Fidelity, but I will tell you, because I haven't seen if Vanguard offers HSAs. I don't know if Charles Schwab, but I know Fidelity, because we had so many people bring it to our attention, that you can go directly put your stuff with Fidelity as a custodian, and they have access to all their low-cost index funds.
Now, one thing you want to make sure of, though, right? So if you do have access to HSA plan, and say you have an employer that puts money in the plan for you, they make a $1,000 contribution or do some sort of employer contribution, sometimes they will make you captive to a provider. So even though you could go open an HSA at Fidelity, if you were to do that, you perhaps might miss out on free employer money. And we'd rather have free money at a bad provider than not free money at a really great provider. So make sure you consider that and you understand how your specific plan operates before you decide to go away from the employer-provided option.